Why is the government imposing a 40% tax on your soda, your car, and even your pan masala? Is GST 2.0 really about health? In this video, we'll break down what sin goods actually are, why they have been put under a 40% GST slab, and which everyday items from cigarettes to luxury SUVs are now going to pinch your wallet even harder. Hello viewers, I'm Kavya Khandelwal and you are watching The Edge. Let's rewind for a second. When GST was first rolled out in 2017, it came with multiple tax slabs, which are 5%, 12%, 18%, and 28%. But there was a catch. Some products also had an extra cost on top, like cigarettes, luxury cars, aerated drinks. All those things were taxed at 28% plus cess, which could push the total effective tax above 40% anyway. Now, with GST 2.0, the government wants to simplify things. Instead of mixing slabs and cesses, they have created a new flat 40% slab called the sin goods category. Sounds neat on paper, right? But here's where it gets interesting. The big question is, what counts as a sin good? Because that is subjective and may vary person to person. If cigarettes are obvious, what about sugary drinks or even that dream car you have been saving up for? This is where GST 2.0 shakes things up. Let's look at the list. Number 1, tobacco and related products like cigarettes, cigars, gutka, pan masala, and chewing tobacco. These are the usual suspects. Not only do they now face 40% GST, but some will also continue to attract cess, which is Central Excise and Service Tax, as high as 96%. That means smoking and chewing tobacco could become a luxury hobby only the rich can afford. Number 2, sugary drinks and energy drinks. That fizzy cola, your favorite energy drink, under the new slab, these will face 40% GST plus, in some cases, an extra 12% cess. Why? Because India is already the diabetes capital of the world and sugar-sweetened drinks are easy villains. The idea is simple, make them expensive so fewer people buy them. Number 3, gambling and betting. Lotteries, casinos, and even online gaming platforms are now proposed to be taxed at 40%. That means your weekend rummy app or fantasy cricket league is about to get way more costly. But now, the Promotion and Regulation of Online Gaming Bill 2025 passed the Rajya Sabha on Thursday, that is August 21, 2025, clearing the Union Cabinet and both houses of Parliament within 72 hours as the government moves to quickly ban real money games or RMGs. The law is now headed to President Draupadi Murmu's desk for her signatures, after which it will become an act. The government argues that gambling drains family savings and fuels addiction, so it deserves a sin tax. Number 4, luxury cars. Here's the kicker. High-end cars, SUVs with engines above 1500cc and a length above 4 meters are now in the 40% GST slab. And on top of that, there's a 22% compensation cess. So, that imported Mercedes or Range Rover, easily 60 to 70% of its price will just be taxes. Talk about driving your money straight into the government's pocket. Number 5, processed junk foods. Reports suggest packaged junk foods high in salt, sugar, or trans fats could also move into the 40% bracket. Think instant noodles, chips, or those ready-to-eat processed snacks. If that happens, late-night munchies will suddenly cost you a lot more. But here's the twist, alcohol is not included. Why? Because alcohol is constitutionally outside GST. Each state has the power to tax liquor through excise duties. That's why a bottle of whiskey can cost rupees 800 in Goa but rupees 1800 in Mumbai. So even though alcohol is technically a sin good, it escapes GST's 40% hammer, leaving you to pay whatever your state decides. So the real inconsistency is this: cigarettes and colas are sins, but alcohol? That's a state subject. So here's the bottom line. GST 2.0 wants to simplify taxes by putting harmful and luxury goods under one big 40% slab. The government says it's about health and fairness. Critics say it's really about boosting revenue. Tobacco gets pricier, sugary drinks and junk foods could be punished. Gambling and betting face a heavy hit. Then luxury cars, out of reach for most. Alcohol, still playing by its own rules. Whether you see it as a public health win or just money-making trick, one thing's clear, sin goods are about to cost you a whole lot more. Do you think this 40% GST will actually reduce consumption, or will people just find ways around it? Drop your take in the comments and don't forget to like, share, subscribe and follow The Edge.